All right, and joining us now to talk more about these tariffs and the impact on Texans is UT Finance lecturer Akash Kanojia. Akash, thank you so much for joining us.
Thank you for having me.
Absolutely. So first, talk to us about the swings in the market we have seen this week. I know there have been a lot. It just seems like the simplest social media post can send things soaring or send things falling. How volatile are things right now?
To say that they're volatile is an understatement. There's a measure of volatility called the VIX, which we follow pretty closely in markets. And it swung from 21 to it was 52 this morning. I think it's at 33. Generally, to me, anything over 50 is crisis territory. And obviously, we've had wild swings in it. So it's I haven't seen anything like this before, to be honest.
And what do these changes, these dramatic swings, mean for investors here in Texas?
Well, first of all, I think you have to I expect the volatility to continue. So the president said that we're having a 90-day reprieve. What's going to happen after the 90 days? I also don't think when the stock market was up 9.5% roughly today, that I don't think investors are still considering what even a 10% tariff on everybody else, all the other countries, is still going to do to corporate profits. So when corporate profits go down, stock prices should go down with them.
And if you're maybe not someone who gets into stocks or investing, what does that mean for the average Texan?
So three things, I think. First of all, I would expect still a decline in economic activity in general. So the tariff on China, for example, the Chinese import soybeans, cotton, beef, and pork, petroleum products. These are all major exports for our state. So if you lose a customer, who else are you going to sell to? That's not clear to me. So I think there's going to be a period of belt tightening. I think there's going to be business difficulty, et cetera. Couple other things is even before the big tariff announcement last Wednesday, we've had consumer sentiment going down for about 3 months. So from January to March, roughly. And consumer sentiment, it's a subjective take on how people feel about the economy. So when people don't feel safe and secure, they're not inclined to go out and spend on luxury goods. So I think you're going to see in the coming months significant slowdown in like restaurant activity, home purchases, all that kind of stuff. People are just not sure where the economy is going. Businesses may or may not be hiring. People may be afraid they're going to lose their jobs. So you're not going to go out and take big risks when you're in that situation.
And Akash, I know we talked. Oh, I'm sorry.
Go ahead.
I was going to say, I know we talked a little bit about the volatility earlier, but how do these tariffs compare to what we've seen the U.S. implement against other countries in the past?
This is big. So a lot of people have been talking about the tariff regime that we had during the Great Depression. And back then we had average tariffs across all goods at about 20%. Even after today's announcement that many of the tariffs are being lifted, the analysis I've seen is we're still at roughly a 22% tariff regime across all imported goods today. And it's debatable whether or not the tariffs of 1930 caused the Great Depression or not, but this is unprecedented, at least in our lifetimes.
And I know we talked a bit about the longer term effects, but I just want to ask you one more time just to kind of sum it up. What do you think the long term effects of these tariffs will be on the markets and on the U.S. economy?
So I think the market's going to continue to go down. I told my class this morning, I don't trust this relief rally. I think there's more bad news to come, particularly when we see information about corporate profits, layoffs, et cetera, things like that. I think in the long term, it's very uncertain because so many different things can happen. I do think the fundamental role of the U.S. in the world as the consumer of last resort, so to speak, I think countries are going to reevaluate that. But with that, there's going to be pros and there's going to be cons. So that's hard. A lot depends on what the administration ultimately decides to do.
UT Austin finance lecturer Akash Kanojia, thank you so much for joining us.
Thank you for having me.